What's going on, y'all? This is another episode of the Jermaine Johnson Show. We got a good one coming to you today because we're going to talk about specifically about life insurance and property and casualty insurance and just insurance in general, about how that type of stuff connects to wealth and that type of thing. But also how kind of rates are determined. I know everybody's kind of dealing with these premium increases now, and how that stuff is related to politics and where we're at in national politics. But also, this is my good friend Barrett Hurd, so we're gonna get into some other conversation, maybe about some sports, about golf, about how he thinks he's gonna be a PGA professional one day. And we might even get into some other cool stuff going on here about this national stuff, and maybe a little bit of Andrew Yang. Who knows? Who knows what we're going to talk about here? But for the people who don't know who you are, Barrett, please tell the people who you are, what you do, a little bit of background about yourself.
Sure. Yeah. My name is Barrett Hurd. I grew up in Louisiana, down there for quite a while in my childhood. And while in high school, decided as a senior that didn't want to go like the college route at that time. Wanted to go on, just join the military. So I went through several recruiting processes, ultimately ended up becoming a diesel mechanic in the Army. Came here to, coincidentally, Columbia, South Carolina at Fort Jackson. Was here for right around 12 months. Went through what we call the Army Preparatory School. Tested out of that, got the GED at that point. Went through basic, AIT, all that kind of good stuff. But I left here right at the end of 2010-ish, and swore I'd never come back to Columbia. Went to El Paso, Texas. Was there at Fort Bliss for 3 years. When I got out, moved back to Augusta, met my now wife, Nicole, who is from Aiken, South Carolina. And
Hey,
still,
baby.
didn't think I was going to end up back in Columbia, but almost exactly 10 years after I left, we ended up back in Columbia, started business, met you, did the whole thing with Andrew and whatnot. And so I will gladly say Columbia is honestly a lot nicer. It's a lot better of an environment than when I was here. Probably has a lot to do also with my age and such, but at the time, 18, Columbia wasn't really where I wanted to be. But now looking back, we got a 2 and a 4-year-old, and the area is really nice. Bought a house, obviously working with you, got the business and everything. And so kind of hard to imagine being anywhere else than here at this point.
Yeah, well, I kind of have that effect on people, man. Get people to do stuff and come on around and and live in a place that they didn't never thought they'd see that they'd be living in. So I kind of want to get into this. Let's just pop right into this insurance stuff real quick so we can really get into some other stuff, man. I know premiums and that type of stuff. I mean, for the people who really don't understand that stuff, man, explain it to them real quick because listeners, y'all, Barrett has been in the insurance industry for a very long time, and he has taught me a lot about insurance and how that stuff works, and the importance of certain things. And that's one of the I guess well kept secrets about how to get your children some wealth, but also how to stay protected with your belongings and those types of things. How does that stuff work, and also how is that stuff connected to I guess politics and that type of stuff?
That's a good question. Yeah, so kind of what you alluded to as far as my time frame in the insurance industry. I started at State Farm in Augusta, Georgia, in Grovetown specifically, about 10 years ago now. So around 10 years I've been in the industry. For the first 5 years, I was really focused and specializing in financial services, so life insurance, disability products, things of that nature. When we met and we ended up launching this agency in 2020 with Goosehead Insurance, we made the transition to our focus really being property and casualty. So my reach is kind of broad. My education, everything that I read, kind of tends more to be financially focused. But with everything that we've got in the industry, it all still to some degree ties together regardless of the product line. So the biggest thing that I guess would be connected as far as like politically and whatnot, a good thing that a lot of people don't understand is each state has got an appointed office, insurance commissioner by the governor. They basically, their role is to make sure that the laws that go with the insurance, the different kinds of requirements are reasonable and that they're met. And also to make sure that like carriers can't just charge you whatever they want to charge. So to like right now, this current situation, we had an estimation of around $5 to $7 billion as an industry for losses. So when the algorithm across the board is trying to figure out, how much should your premium cost for like your vehicle or your house based on the coverages you pick or whichever, that's kind of what they're doing. They're figuring out for us to make sure that we can pay out what our estimated loss rate will be. We need to collect this much premium to cover the risk. So in the last several years after the pandemic, we saw losses of over $20 billion in back-to-back years. Well, if they're only, calculating and figuring for 5 to 7, and then we get 2023 in back-to-back years, then that really throws the entire, equation off. And at the end of the day, it's just math. So what they're looking at right now, working with legislatures or whomever, is, we're seeing a big problem with supply demand. So, what's kind of causing that to happen? Someone's house burnt down 8 years ago. Maybe it cost $100 a square foot to rebuild. Now it's costing $200 a square foot to rebuild. Where's that $200 a square foot coming from? Is it entirely supply? Is it a gouging issue by the supplier? It's kind of hard to tell. So they're working on that. And the other thing is just simplistically like the cost of vehicles. Cars have, skyrocketed in cost. The average cost for a car now is like $45,000. And as an example, your property casualty, like the property loss minimum in South Carolina for your auto is only $25,000. That's what most people carry. So a lot of the people, when they have a loss, are now more so than ever experiencing total losses versus when they would previously maybe just have a fraction of that cost to be able to repair or replace a vehicle. Now, instead of it being just the $12,000 or something to go do a minimal repair, it's going to be the cap. And so the same thing with bodily injury. When somebody has, something happened in an accident that is bad enough they have to go to a hospital, the cost of medical care is substantially more expensive than it was before. All of these things come back to a lot of the different things that in legislatures they're trying to work on, right? The cost of medical costs. Right. So if you go to the hospital, how much of that stuff is going to be actually billed to you, the individual? When it comes to your home and things of that nature, your property, why does the stuff cost so much? How do we work on making that stuff more manageable? And so at the end of the day, these companies are also, they're companies. There has to be a profit to some degree, or else they can't afford to pay the humans that work in their companies to be able to, service your claims and your billing and things of that nature. So, and it's pretty complex in a lot of ways, but it's hard to do sometimes. If we keep it simplistic, don't take it personally. Like it's not them attacking you. A lot of my clients will call and say, I have had no accidents. I've had no tickets. What's going on? So congratulations. And imagine if you did. Right? It's not worse for people who are experiencing, lapses in coverage or their license got suspended or whichever the case is. So pretty fun. And then on the financial side, life insurance, disability, things of that nature. With legislation, a lot of employers are starting to really, push those kinds of burdens onto the employee. Even back 20 or so years ago, when you see like pensions start to disappear and now 401ks become more prominent. Ultimately, that's a shift of whose responsibility your retirement is. Is the retirement going to be shouldered by your employer, or is it going to be shouldered by you, the employee, and based on how much money you can put aside into your account and how much you can save? And so when it comes to a lot of the financial services, the same way. A lot of your employees will give you life insurance coverage. They'll give you disability coverage. But the fact of the matter is you have no marriage to that company, nor do they with you. And if for whatever reason you end up leaving, those coverages can cease to exist. Or if you get injured and the disability, and as an example, it doesn't cover you once you've been replaced, you can end up without coverage. So having those things personally owned is also really imperative, because it doesn't seem like we're going the other direction. It doesn't seem like your Boeings and such are going to start really shouldering those costs anytime soon. It's going to continue to be something that we have to handle.
So I hope the listeners heard that. I mean, that was a fantastic explanation about a lot of this stuff. But I hope y'all really heard what he said, particularly in the part where he was talking about each state having somebody who was over the insurance industry, essentially, or the insurance departments, and those depend on who the governor is. And if your governor believes this way or that way, or that there can essentially affect your premiums and affect how your insurance is and affect how much you have to spend out of pocket on a lot of these things here. And we actually were, just this past year, we were doing a lot of arguing in the General Assembly, man. Like we were doing a lot of arguing about, and I'm gonna ask you what's your opinion on this, but we were doing a lot of arguing on, I guess, insurance for bars and like these clubs and things like that, because in the liquor insurance, right? So we were arguing about what we need to cover, what we don't need to cover, like and trying to keep some of these premiums up, because what has happened, and you've seen some of these stories that have been going on across the states. But an accident will happen, right? So a guy go in there, he'll go to a bar, he'll be drunk, he'll come out of the bar, and he'll go get into an accident, or she'll go get into an accident, and then the victim who has been in an accident will not only sue the person that did the accident, but they'll sue every single bar that served that person alcohol in that night, right? So and that particularly just happened from the Folly Beach accident, where the gentleman had lost his wife on the remember on their wedding day, right? And they sued, and of course he won. So situations like that will put all these businesses out of business. But what's your opinion on those type of situations?
Yeah, that's tough. Anytime, especially you have a tragedy like that, a couple simply going from the wedding ceremony to like the hotel or whichever, and somebody in this case, and I think it was like a 15 or 25-mile-an-hour zone going 70, 80 miles an hour. Obviously, golf carts are not made to handle impacts from vehicles, but especially not at that high rate of a speed. So he did win a pretty sizable amount of money, but I mean, it's never enough. And I think everybody would agree in a tragic situation like that the dollars aren't enough. But at the same time, they then also are upset with how much the cost is of these insurances. So whenever you see like liability in this example, you have these different establishments or whatever the case, everybody involved has insurance coverage for something. So in this person's case, let's say let's say it was like you or I, we're driving, we have our auto insurance, a factor of that policy that I pay for is going to be able to pay for the bodily damage inflicted if I were to be at fault. In the event of something like this, where it comes down to alcohol consumption, it's tough, right? You've got to determine like who was the negligent party that didn't say like, hey, this guy probably doesn't need to be drinking anymore.
Yeah.
What are you going to do to handle that? And I think a lot of establishments are already kind of finite on funding. Like they're already running pretty sharp. So whenever they then go to like an employee and they want to do these additional trainings or whatever, they've got to kind of balance the value in time. Like, do we really have time to pay somebody that we're paying $3 an hour to really learn and care enough, or do they want to prioritize making money? And if at the end of the day, we both know they're going to prioritize making money, well, then someone has to step in and provide those guardrails to protect the public. So we know that that's going to be a problem. Something happens, the first person that we're going after, obviously, is going to be the individual that inflicts the damage. That's ultimately who the burden is bared. It's going to be the person who inflicts the damage. However, then I don't see a problem at all with saying, why is it that these other individuals didn't stop you? Why did they let you consume that much when we know what the legal limit is? And then you have a lot of bars that have done a good thing where, at least when I was in the Army in El Paso, a lot of places they would run Ubers. Mm-hmm. They'd say, leave your keys, leave your car, we'll pay for your Uber home. And then all you guys
I've never heard that before, man. Why the heck don't we do that? I've never heard of that.
I mean, that's, in my opinion, it's a cost, obviously, that a lot of establishments probably don't want to incur. But I mean, just having something like that, I think, is pretty nonsensical to not have. Like, if we're just going to say, hey, listen, you guys just need to be responsible. The science on alcohol has become pretty severe at this point. We can see that the impact it has on your brain, it's not minor. Like, it's pretty massive. So, we can look and see at what the impact is. Also, South Carolina, we're number one in the country almost every single year, at least that I've been in insurance, per capita for roadway fatalities. And this is a big reason, is you've got a lot of these facilities and such where you can't go to a liquor store after 7 p.m. They're all closed. You only have one option. If somebody wants to go out and they want to get a drink, They can't just go buy something and take it home and drink at their house responsibly. They have to go be downtown or go out at a bar. And then it's easy enough to be impaired and lose track of time. And then you're putting everyone in danger.
You just gave me an idea, man. You just gave me just like that. That quick, you gave me an idea. What I wonder if this idea would go over with my Republican colleagues to, I guess, to remove liability from a bar or a club for over serving alcohol if they offer a free Uber or taxi service for that person to get home. I wonder if we could do that, because if I'm offering you this service to get home and to not do this, that means you made the decision, the choice to drink and drive. You made that decision, person, to do that, and I gave you the ability to not break the law. So that there should remove my liability in a situation.
Yeah, I mean, it eliminates the risk element, which is what your insurance is predicated on. So
yeah,
if you have a risk like that, which is obviously like at 5 points downtown, it's going to be pretty astronomical. It's a pretty much given. If somebody has a vehicle and they drove to 5 points, they're not walking home. Whenever we met and we were working on Andrew's campaign, I wasn't being paid for a while when I left my State Farm position. That's what I did, was drive Uber and Lyft. And I'd like to say, honestly, I mean, I was really busy. So a lot of people were responsible. They were taking Ubers and Lyfts and such. The biggest thing I think is going to be the problem, the biggest hurdle to overcome is supply and demand. You're not going to have an easy time making sure you have enough drivers. So that's a challenge that has to be overcome. And that's not going to be easily overcome without any kind of like the third party's buy-in. So a lot of drivers for like Uber, Lyft, or whichever, if they're de-incentivized by those companies at those times, then that's going to make it a little more challenging. If they're incentivized, which usually that's the case, typically they have hot hours, hot zones, all these kinds of like bonuses and stuff like that, then that definitely helps. But that's, I believe, based on also the way that the system and algorithm calculates against supply and demand in any given area. So like Charlotte or Charleston, for example, would be more lucrative at those times versus like when I was in Columbia, we didn't have a lot of bonuses and stuff driving down here.
So it sounds like this is sounds like a lot of these situations can be, I guess, solved by legislation, man, or at least assisted by legislation, because I think we need to do a better job at looking after our citizens, man. Specifically with some of the stuff that you've already said. With we don't eat, like, our minimum, 25, 50, 25 is not enough to even cover the average, vehicle and accident in South Carolina right now, which is one of those things. And also, people, I hope y'all also understand that in South Carolina, if you're an insurance broker, there's no agency fees that you charge, right? So other states, charge an agency brokerage fee for running your quotes and those type of things. They kind of tack on top of your premium, and that gives agents more money. That gives us more money. But in South Carolina, we don't have that. So you have different run rates and different funds and those type of things that are there. So you're actually, for some states, you're actually paying cheaper than other places.
Yeah, and that's kind of a balancing act, though. So like North Carolina, for example, does have agency fees. South Carolina and Georgia do not. However, the premiums in South Carolina and Georgia are substantially higher. So for a lot of the agencies in like a North Carolina or whomever would have extremely low premiums relative to ours, realistically, it's harder for them to be able to make money and sustain without having the ability to charge those fees. On our end, again, being, leading the country per capita in roadway fatalities, we're this year, I believe, number one in domestic migration. We've been top 3 or top 5 in the past 5 or so years. Our population is exploding, which is putting more vehicles on roadways that weren't built to handle the kind of the influx that we've had. So that also inherently increases the risk. You've got a lot of more homes now that have people that own these homes. We've got storms, obviously, but with any of these kinds of increase again to supply and demand, you're going to see these increases in premiums. North Carolina has somehow avoided being one of the states where everybody is just flying to. And that's probably one of the things that the commissioner would probably modify if they ever got to that point. but the commissioner there is allowed to keep that in place because ultimately the premiums there are substantially lower. Now, those fees are also one time. So as long as you buy a policy and you don't renew it, rather with like a different company, like if you keep it with the same company, then they're not going to charge you a fee at the renewal. It's specifically for the agent to be able to be compensated for the time and effort of going through, shopping through all these different kinds of companies and then finding you an alternative option.
I want the listeners to add these questions to your repertoire when people are running for office and they're coming to you for their vote. I want you to start asking them about insurance and insurance premiums. What's their plan to get some of them cheaper or lower, that type of stuff.
They're probably going to be oblivious.
They're going to be
they're going to look at you and say, "What are you talking about?"
Yeah.
But it's something that they should be aware of. Like they understand the cost of groceries increasing. They understand that the cost of fuel is increasing. Like they know those things. And I'm sure that they all have insurance themselves. So they're also aware to some degree, but they're not educated by any means. So yeah, if you ask them that, they'd probably not know anything about it or what to do about it.
I didn't even know that there was like an insurance czar in South Carolina until I started studying to get my test. And I was like, yo, this is an actual, this is an actual position? And I was like, yo, this is crazy. Then I started meeting those people, man.
Well, so everyone has this belief that the insurance company is like targeting you, or like your premiums are high, we just don't like you, or something to that effect. So whenever they see increases, they take it personally. Hard not to in a lot of cases. But the good thing is, I guess, if you kind of assess it like state by state, in our situation here in South Carolina, again, it's basically just math. So it's a matter of balancing that math out. During the pandemic, when we started seeing these spikes, people were at home a lot more. So companies thought that a lot of losses would be more mitigated just simply by you not driving to work and driving home every day, right? Like decreasing traffic, decreasing the amount of you not being at the house. So if something happens, you can prevent the loss, things of that nature. That wasn't what happened though. Instead, what we saw was a massive spike in fraud. So you see, like right now, a lot of roofing companies is a good example. They needed to make money. They had an opportunity and they seized that opportunity, and they would go to homeowners and say, hey, we can get you a new roof. We'll put it through your insurance.
Yep.
If your homeowner's insurance is $1,000 a year and your roof is $15,000, that math isn't going to work out in your favor. And if you do that then on a broad scale, it throws off a lot of the algorithm that we use to kind of figure out what our loss rates are going to be. So then whenever the companies come to the state commissioner and say, hey, we got a problem, we need to increase premiums. Commissioner during the pandemic didn't allow it. He said, no. Right now, people are obviously in a hard position. What am I going to do? Allow you to go up 25%, 50% on the premiums? So they were locked. Well, now they're not. And now you're seeing premium increases 50 to 100%, all flat across the board. And it's not something that's just going to stop. So they've got to catch up because one, they don't know if this new loss rate that they've seen back-to-back years is the new normal or not, right? Mm-hmm. We don't know for sure. So we have to be prepared for that. We have to assume that it's going to be this way moving forward. If it's not, then you'll see those, come back down. But as of now, the commissioner allowed them to make that change after protecting the population to a degree for those years while we were in the pandemic and people were struggling with work and such. Imagine, you lose your job because your employer starts cutting back positions in the pandemic. Oh, and by the way, your insurance premium doubled. Yeah. That wouldn't have been fun. So now that people are back, unemployment, I think in South Carolina is like, -5% or something.
Yeah, it's essentially zero. It's essentially zero.
And now you're seeing those increases take more effect now than before.
Yeah, it's crazy because I had a lady who was calling me about some home insurance, and I was like, all right. So I ran her home insurance, and she had like 6 claims, right? Like 6 or 7 claims. The top claim was like $32,000 or something. Like it was like $32,000. Another one was like $7,500. Another one was like another $5,000, $3,000. And so it was just a whole bunch of claims, right? And nobody at that point, nobody wanted to cover her. Right? Nobody was like, nah. They just kept saying nah. They kept declining her. And I came back to her, and I was like, ma'am, well, I'm sorry, but they're all declining you at this point. I said, I think the cheapest one that was there was like $5,000 a year or something like that. But even then, when I went through everything, they were like, nah, we're just going to decline it also. So, I was trying to get this lady to understand, but she couldn't see it. She couldn't understand. I was thinking like, ma'am, it will literally take you about 35 years for the company to just break even on all the money that you have taken from them. And I was thinking like, can you not see like they're going to try to make some sort of a profit, but right now with you on getting insurance with their company, they're losing money. Like you're a liability. Like, ain't know what insurance is for? I said, but man, they're never getting any money from you. They're just giving you money.
That is the common thing. I think it's reasonable on a lot of people's ends to believe I'm paying insurance so that if something happens, I'm covered. In the case of a home, though, for this example, the insurance isn't really for any and everything that goes wrong. At the end of the day, when you become a homeowner, you shoulder a lot of the burden as it pertains to like maintenance and such. So yeah, sure, you may have instances where the policy covers it, but it truly is supposed to be for catastrophic situations. So whenever you have somebody who is collecting, we'll say in this case, 3, 5, 10, and then a $30,000 loss in a matter of 1 year, like you're saying, yeah, I mean that the premiums that they're going to collect have to come from somewhere, and they're not coming from you. So then they're going to come from everyone else, because that ultimately what we are doing is pooling together our funds so that if something happens to our neighbors or ourselves, we would be protected. But again, catastrophic situations. So the majority of things people don't recognize, yeah, sure, you may have the coverage in there, but that's the reason why your deductibles have started to go up. We don't have $500 deductibles as a standard on homeowners anymore. And now it's even going up to say like 2% of the dwelling for wind and hail. So 2% of whatever your dwelling coverage is. And they've done that because wind and hail losses have skyrocketed out of nowhere. And instead of people simply just going to get a new roof because they need a new roof, because they're $15,000 or what the case, they file the claim because it's easier to pay $1,000 deductible. But at the end of the day, kind of the whole point, if you're using insurance as a savings account, instead of putting the money away to handle those losses on your own for maintenance purposes, what else are you going to see but premiums increasing? I mean, it's the only option. The company has to increase them because of the rate of losses and how dramatic those loss costs become over time.
Yeah. All right. So you saw the debate between President Biden and former President Donald Trump, right?
Unfortunately, I did have to sit through some of it. I couldn't make it through the whole thing.
Okay. Well, did you see the part about them arguing over their golf game?
That was unfortunately the part I did, in fact, sit through. Yeah, that was super fun. I love whenever, the weight of the world is on our shoulders and all we can talk about is each other's handicaps. That's priority.
All right. So, question: who wins in this match? You and me versus President Biden and Donald Trump. Who wins?
Man, well, so the first thing, if it's you and I, our handicaps are substantially higher, so that gives us a massive advantage. We'll get a couple of strokes per hole. It depends on also if we're keeping the score for the other team, because if that's the case, then I think we have a good chance. If it's just whatever scorecard they turn in, I mean, I've seen Trump play in this episode with Bryson DeChambeau recently. He's not bad, but I'm wondering how many strokes he's going to just lose.
He's a cheater.
Seriously, to fly off.
I know he's cheating.
But I will tell you this, to be real, if we're going to be fair here, both of those individuals have played vastly more golf than us in their life. Mm-hmm. So to be real, I'd be shocked if, we're playing from the tees we're supposed to play from. We're probably going to play from the senior tees. It'd be pretty close. Now, luckily, again, we're going to get a lot of strokes in stroke play. So, I mean, I guess it depends on the game. Trump's not that bad, man. I hate to say it. I thought you were going to ask who'd win between Trump and Biden. I was going to say that's easy. I mean, I feel like Trump would walk him. But Biden's argument was during his vice presidency. I could see Biden probably winning back then.
Yeah,
right now, I don't think right now.
I think I said something. I said I think Biden would win, but Trump would cheat so bad he would have Biden convinced that he won. So
I mean,
I was like,
probably, yeah. I mean, that's probably a pretty reasonable take. I mean,
yeah.
his granddaughter. I don't know if you're familiar. Trump's granddaughter is like, she shoots negatives, man. She used to scratch golfer, but I'm saying like they play a lot of golf, man. He does own a lot of courses. It's pretty much all he does, man. That was kind of my biggest problem with him as a president was like, dude, can you like stop playing golf so much, please? Like
Yeah. You think
he's
Kamala
playing a
plays
lot of
golf?
golf. Do what?
You think Kamala plays golf?
I mean, I would imagine that she plays golf, but not to that, not probably not as like her go-to form of hobby. I mean, like if let's say as an example, she was president, I don't think we would see a lot of headlines about her playing golf.
Ain't
I
out there.
don't know what she's doing, but I can't fathom her out on the golf course like every weekend or something. That seems unusual.
So now that President Biden has dropped out of the race, and we got Vice President Harris versus Donald Trump. What's your opinion on that, on the whole switcheroo? How that affects things, and what's your opinion on that, man?
My favorite thing is that Biden dropped out of the race on National Ice Cream Day.
Oh,
I'm just saying, I feel like this was kind of planned. All right,
that was a setup, wasn't it?
I saw that. I was like, hold on now. Wait a minute. I mean, I think that the biggest thing to me is if for the last 4 years, really 8 almost, people have been really up in arms over the age of the candidates, which is an incredibly fair thing to be up in arms over. We've got individuals that are, 80. They probably really shouldn't be in a position that is one of the most stressful positions on the planet in any kind of role of any country. If they want a younger candidate, they keep saying it over and over. It was the thing that ultimately, in their mind, disqualified Biden as a potential contender. You now have that.
Mm-hmm.
So now that you have someone who, what is she, like 60, like 58 or something?
Maybe, yes, yeah.
Yeah, I think she's late 50s. She checks all those boxes. So now if you have kind of painted this picture of Biden being too old, blah, 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 whatever the cases are, if you're a Trump supporter, man, you're in a jam because your guy now is the only one in the race that checks all those
oldest
boxes.
Nominee in history, yes.
Hey, so I guess really we're about to find out how much people really care about age.
I don't know why we, I may take some hate for this, but I don't know why we don't have an age limit on being able to run the, run for the highest office in the land, man. I mean, we've got age limits on, being a judge. How come we don't have anything on being the president of the United States? I mean, it's already showing that probably not the smartest thing in the world to have somebody who is at the end of their life leading a country that's full of people who are at the beginning of their lives, and it's like very interesting.
The massive disconnect, it's not relatable. If you're coming out of high school, let's say that you're about to be 18, you're about to vote in this election, there's not much incentive. Like, why am I voting for 2 80-year-olds? They're not related to me in any way as far as lifestyle either. One's a supposed billionaire and the other person has been in politics for 70 years. Like, there's not any kind of connection there. So at least I thought that was one of the massive things that we did well when we were working with Andrew was the field was, one, extremely diverse, and then two, the age was relatively low amongst most candidates. So we didn't have a lot of old candidates. We ultimately had like Biden, but I mean, I don't know that I'd be saying, hey, we need to have an age limit because there can be situations where an individual in their elder years might still be a very brilliant person.
Right. Cognitive.
But at the very least, that should still fairly be something on the table to talk about. So if someone is running, we should be able to say, is this a concern? But some people also age differently. Yep. Some people at 80 years old are sharp, man.
Yeah. I know some at 90 that are super sharp. Yeah.
Some people, though, when they're 50, you're like, hey, man, you probably shouldn't have keys. So, it's one of those things. It's an individual basis kind of thing. You probably shouldn't just paint a broad line.
You really just made that was a good point you just made there, because some people at 50, you're like, dude, this person here is just not like You're not sharp. You know what I'm saying? So, and that person can still run based on being the proper age. So, yeah, that's a good point to make there. And this probably lets me move to the next person I wanted to talk about before we got off here. How terrible is freaking JD Vance? Oh my God.
I was genuinely shocked. I don't even understand the strategy of picking JD Vance. I didn't. Whenever I heard that, I was like, that wasn't someone I expected. Just because it doesn't really make sense for the campaign. That doesn't
Yeah.
really seem like a good strategic move. He's definitely not someone I'm a fan of. But I think it's kind of ironic almost. He's in an interracial relationship and he's got these mixed kids, and his support, or rather Trump's support base, not fond of it.
Yeah.
And so
Yeah.
and so
Yep.
to see them acting out kind of makes you wonder where things are going to head for them. Again, not a really good strategic move, but I don't know. At the end of the day, man, like all these politicians, everything you're seeing from them, they generally are going to be out doing whatever's going to get them reelected, which is going to be representing the constituency. So a lot of times you see their history, what they're doing. They're either behind the wheel of a car and everyone's asleep and no one's really paying attention, or they are simply doing the things that their constituents want them to be doing and makes them popular. And unfortunately, in that case, some people have some pretty unpopular desires. Luckily, they're not the majority of the population, and so we'll kind of
Yeah.
see how it goes. But
Well, Vance
no,
sucks. I'm be honest. He's terrible. He's probably the worst one. And I'm serious. Like he's got to be, in my opinion, he's the worst vice president candidate I have ever seen in history, and I've ever heard of. Like he's absolutely the worst. I mean, the guy was praising Obama at one point, was tearing Trump down at another point.
yeah,
Said that called these women cat ladies. I mean, he's the absolute said you need to stay in violent marriages. I mean, the dude he's terrible.
well, he is. But I mean, he also represents a lot of the people in the country that believe in that as a value. Like women should not have the right to be able to leave a marriage if it's an abusive marriage, or whatever the case. Like a lot of people genuinely don't believe in those things. They think that a lot of those things are the cornerstone of the deterioration of our country. It's bizarre to me. You would think that life, liberty, and the pursuit of happiness would mean something different than basically being enslaved in a relationship with an abusive spouse. But here we are.
Yeah, yeah. All right, man. Listen, well, we are out of time on this episode of the Jermaine Johnson Show. If people want to get in contact with you, they want to get an insurance policy from you, they want to get some guidance on where they need to be going financially. How can people get in contact with
It's a good question. We are the biggest brokerage in the country. Should have led with that probably. So if you want, we have a system that basically runs through, we have 70 different carriers in the state of South Carolina and just as many elsewhere. So if you are interested, you want to see what the market is looking like for your personal situation, you can go to thehurdjohnsonagency.com. Hurd is Hurd, Johnson, Johnsson, agency.com. And on our website, you can put in your address. It'll pre-fill most of your information and it'll submit the request to us. You'll be able to see some things off the bat, like maybe like a progressive quote or something. I tell people don't really worry about that immediately because obviously that doesn't take into consideration, potential driving infractions or whichever. But we'll go through it. We'll have other carriers that you can't see and we'll be able to work it out for you.
All right, man. Well, listen, appreciate you coming on here talking with me today, man. Hope we'll have you back on here again soon when we get a new insurance czar in South Carolina, and we can talk about how good that person is doing. And listeners, appreciate y'all for listening to or watching, however you're getting this information. Appreciate you all tuning in. This is the Jermaine Johnson Show, brought to you by the Arena SC. Please like, share, subscribe, follow, all the good stuff. Pass the information on to somebody else as well, because we need to make sure we're taking care of each other on this stuff. So, again, Mr. Hurd, appreciate you, brother. We'll be talking soon. And everybody else, y'all have a good week.
Yeah, man. Thanks for having me on. It's been a pleasure.